First of all, I would want to know whether there is anybody here who works with what we call the famous money market funds. Is there anybody who does some savings using MMFs, money market funds? That's how I would want to start my personal finance session. Anybody in this case here who uses money market funds, MMFs? CIC, like Mian, CIC, very good. It's quite a nice money market fund. I have a student in the physical classroom yesterday who told me that she uses Simele. Yes, we have 𝐸𝐿 who is using the famous Safaricom Mali. Yes, Safaricom Mali. Great. We have Britam. Yes. Now, ladies and gentlemen, I'm not seeing anybody who is making use of Standard Chartered Shilling money market fund, the SC money market fund. It gives about 9.2% per annum, quite low. But I can see you guys are in good books because you are investing in the very best, among the very best money market funds. Before I describe what they basically do, please allow myself here to come and share my screen. So I'll come and share my screen here. Let me know whether you are able to see my screen. Are you able to see my screen very fast? This for the Standard Chartered Bank. This for the Standard Chartered Bank. So under Standard Chartered Bank, assuming, let's do a very simple mathematics. You know, some of us may end up being poor simply because of lack of what here? Information. Lack of information kills. Now, I would want us to look at a modest employee. A modest employee, somebody working for an SME, earning, say, 80,000 Kenya shillings. Somebody earning 80,000 Kenya shillings. A young gentleman, who is not married, earning 80,000 Kenya shillings net. Now, of course, this young man would be paying rent over how much? Very fast, I would want you guys to throw figures to me very fast because you are more exposed in this. You're more experienced in this. Especially the people now who are young, who are earning about this amount. They should be able to have something like, say, 15K, right? So I'm being told here rent, in this case here is 15K. Food and whatever. Let's put it at a higher side because food is also taking care of the extended family. Let's in this case here put food and whatever of 30,000. So, and of course, maybe he has like a small whatever. Talk over. This particular guy can comfortably save how much per month? Comfortably, without training. Can comfortably save how much per month? No, they are not talking to me. 45,000, no, they can't. 45,000 will be too high. 45,000 will mean that you really don't help anybody in your lineage, right? So we say that this guy can comfortably save 15,000 every month. 15,000 every month. So somebody who is having this kind of monies every month, how will they be able to grow their wealth? It will be foolhardy. You will be a foolish person if, for example, you are taking this 15,000 every month, you withdraw it from the bank, and then you go and, for example, put this money in some place in your house. Could be under the bed, right? If you put it under the bed, given inflation, of course, that money will be diminishing in value. The same case with leaving this money just in the bank, idling there, without any interest, or rather at times they give you interest rates which are so low. So in this case here, ladies and gentlemen, the very first basket that you should always think about putting your money, or rather putting your small savings here, is in a money market fund. Put this in a money market fund. So in a money market fund, remember money market funds. These are those markets that we talk over, which you can use for short term. You can use this for short term. Lending, you give them money. Lending or what here? Borrowing. Short term is a key term that I would want you guys to always know. Never make use of money markets in the long term. No. The rates of interest are very small. And their taxes are quite high. So when we talk of money market funds, I would want us to demonstrate. We demonstrate using a practical example here And this is what I'm doing. I'm sharing my screen here using, for example, this as a Standard Chartered money market fund. We call it the SC shilling fund. SC shilling like this, SC shilling like this. So initial investment, this young man may come here, ladies and gentlemen, and for example, he decides to do what here? Just a minute. So he comes here and he says, hey, initially, I would want to make an initial investment, just to squeeze myself a little bit. I would want to make an initial investment of 40,000. And then every month, I'll be giving these guys 15,000 every month. 15,000 every month. At 9%, let's talk of 5 years. For example, you are not very good in terms of investments. You extend this money market savings for more than 1 year. You do like 5 years. Let's see how much this 15,000 every year will amount to, although I, of course, not advise you guys to be investing that way for the long term. So if I say calculate here, you can see in 5 years, this guy will be having 1,193,989 shillings. 1 million, it's about 1.2 million. 1.2 million. And the total interest earned in this case is 253 at the rate of 9.38% effective annual rate. So the question that I would want to push to you is this. Do you think really this is a worthwhile investment plan given this? Remember, most of this 1.2, most of this money is yours. It's coming from your regular water deposits. The interest here, of course, is not really anything to talk nicely about. Ladies and gentlemen, we use money market funds not for purposes of getting rich. Remember, money market funds, basically their rate of interest is just close to the inflation rate. They can't make you rich. But one thing that money market funds will always help us to do is to put us in that situation where we shall be saving. So we shall be able to enhance our savings culture, our savings culture. Now, once in this case, you've been able to harvest, I normally call these kind of investments saving baskets. Once you have harvested some good amount, then now you can think about what you can think about long term. For example, you could have a target of say 100,000. When I contribute this, it hits 100,000. Then I should be able to convert these savings that I have to a long term, for example, investment vehicle. I can go and buy, for example, what we call investment, investment, or rather, I can go and buy government bonds. Like we have the famous that Ruto's government is selling today called the infrastructure bond. Infrastructure bond, and they're selling, or they're giving a return of 16.8% per annum. 16.8% per annum. And remember, infrastructure bonds are tax-free. You'll be given whatever interest you earn without deducting any taxes. So 16.8% per annum, ladies and gentlemen, if you take this, and it happens that you have taken, for example, a bond of 1 million, a 20-year bond, of 1 million, you will be able to harvest in a very, very big way. You'll be able to harvest in a very, very big way, right? I'll be talking about this. So I'm trying to lay the agenda for our today's session. And please feel free to ask questions. Anytime. Great. So then I will be able to, first of all, use the first 15 minutes to recap on what I was doing some time back here called Miller-Orr. Cash management model. Ladies and gentlemen, trust you me, the kind of problems that you are seeing we are experiencing as a country, they are not unique to us. For some of us who have traveled heavily, you'll be surprised. It's chaotic in the UK. In the UK, ladies and gentlemen, what is happening there is that, for example, for the very first time ever, doctors, lecturers are going on strike because they feel that whatever they are being paid is not enough, simply because inflation has hit where rooftop. If you go, for example, to France, remember France, they came up with some bad policy, right? Where they told employees that, you know what, you guys be working and we shall be deducting something like, say, 4% from your salaries. And once in this case here you retire, then we shall be able to do blah, 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 including sponsoring your holiday. I don't know whether it's a whole month holiday where you go with your family, something like that. So what is happening in France? Since they came up with that policy, now people have hit, remember initially it was 55 years retirement in France. People have hit the retirement age and the government cannot afford to honor that obligation, to honor their promise. So what do? They pushed the retirement age to 60. 60 imefika. So mepeleka 62, right? If you follow international news, people in France are really up in arms, saying, hey, we cannot work for the government forever. Now they're taking it to 67, but you have to work for us up to 67 years for you to be able to get. So the same thing, like now what you are seeing our Kenya government doing, like 1.5% building, whatever, 3% building, that money may not be forthcoming. It's a way that governments are all over trying to do what here, to look for revenues, to look for, in this case here, resources to run the country. If you look at, for example, debt ceiling, look at, for example, America. Remember, America is about a $30 trillion GDP economy. The other day, actually 2 weeks ago, Parliament increased in the US. Parliament increased the ceiling, borrowing ceiling, to 40 trillion. Currently, they have overborrowed. They have borrowed more than their GDP. All right? They have borrowed more than their GDP. All right. And the parliament now in this case is going again saying, you guys, government can go ahead and do what here and borrow even more. All right. But Senate said no. That's why it's very important for us to have in this case here like two parliaments that are very independent. So Senate said no. So there is a big, really tussle between the Senate and the government of the US because they can't understand. I mean, times are hard, etc. Remember, like if you look at the interest rates in America right now, I mean, if you look at the Federal Reserve rate, these guys are now charging up to 4.5%. In terms of the US dollar, this is quite high. So then what is happening? Every investor would now want to go and invest in America. That is why now dollars are becoming very scarce in these other countries. All right. Like now we had the very good investors in Safaricom. Most of these guys through foreign direct investments, now they are moving their monies in this case to economies that are able to give them higher rates of interest. Why am I giving you all these great examples? I'm giving you these great examples for you to know that where we are headed to as a nation, all of us would need to tighten our belts. And tightening our belts means what here? Whatever small amounts that you get, don't waste. Ahead of us, there are so many holes. If you're not careful, utazama. Is there anybody who thinks that, for example, the next 3 years, 5 years, is there anybody who is foreseeing like life will start becoming good in Kenya in the next 1, 2, 3 years? Please talk to me. Is there anybody who is able to make a prediction and tell us that, for example, in the next 1 or 2 years, fuel price will move from about 200 to say 120? 120, you guys talk to me. You are mature. And remember, we're not talking about politics here. We're not talking about politics at all. Don't tell me that, Mwalimu, you are a UDA, you are Azimio. No, I left those things a long time ago. I'm forging ahead. I mean, I've got an institution to run. I've got a family to run. Why should I be looking behind a lot? Life will be tougher. And that is why we are having this concept of what here personal financial management now is going to be a key thing. It's going to be a key thing moving forward. And if that is the case, for those of you who are running companies like myself, I'm running a college known as RCM Online College. You must really be good at managing cash as a component of working capital. And how do you get to manage cash very well? You must be good with this model here called Miller-Orr model. It's quite a nice model. It goes like this. So we have in this case here cash. We have in this case here time. So ladies and gentlemen, at any given point in time, like if it is RCM Online College, we must be having our optimal cash position. Optimal cash position. So in this case here, we have optimal cash position. Optimal cash position like that. Optimal cash. So for example, in RCM Online College, our optimal cash is about 2 million. 2 million. So on a monthly basis, we are expected to be having about 2 million. 2 million to be able to pay salaries, lecturers, rent, etc., etc. We need about 2. If I have 2 million today in my bank account, you can't even see me advertising on Facebook. I relax a little bit. No, but I mean, this is the comfortable zone. Comfortable zone. And of course, we can't have 2 million throughout. There will be ups and downs in business. Of course, in this case here, for example, right now, students are paying us fees. So I expect this money to keep on rising. All right. So in that case, I must come and set what we call the maximum limit, maximum cash limit. We have here maximum cash limit, and then we have the minimum cash limit, minimum cash limit, like that. So when students pay us fees, what happens? We get this money rising. So it rises like that. We cannot allow it to go beyond the maximum cash limit. Assuming, ladies and gentlemen, that the cash limit maximum that we have put here is something like 4 million, should we get more cash, this cash in between here, this one here will be called a surplus cash region, surplus cash region. Because you can see now when this graph goes up, we are going to be holding lots of cash with us. It's wrong to hold lots of cash in a business. Money has an opportunity cost. This cash that you're holding, it could be like 1 million, like 2 million. This money, you can go and invest it elsewhere and it generates some return. Why should you have excess cash in the company? That's very wrong. So like if it's RCM Online College, what we normally do, once we realize we're getting surpluses, we must find a balance. We must find a way of taking this money down. This excess money has to be invested somewhere. So how do we invest this? Remember this cash you're managing. Don't tell me that this working capital, which is a working capital component, that you have gotten 2 million Kenya shillings excess, that you'd want to go and build a house with that money. Utatupambao. This is a short-term resource. You can't use short-term resources to make long-term investments. A house is a long-term thing. If you do like that, then there'll be a mismatch. You will end up in this case here having so many assets that you can't dispose at the time of emergency. So like if it's RCM Online College, what we normally do is to go and invest this excess cash. We invest the excess cash either in those securities that you can sell very easily, like treasury bills, the 3 months thing, right? 3 months, 2 months, or even 91 days, etc. We can go and invest. So in this case here, you buy securities. When you buy securities here, what happens is that the excess cash goes away. And then now you have some security. So the excess cash goes away, you come back here. That's why we normally call this optimal cash position the returning point. Always, we have to return there because that is our optimal. Optimal means best. So then we come again, students, of course, after buying, now we're back at 2 million. Again, our dear students give us fees. We normally have very good students. You will hardly get our online students running away with our fees. They hardly run away with our fees. Hardly. Most of them, they'll come back and tell you, hey, now again, they pay us. We move like that. Cash is improving. Once we reach it, we can never allow ourselves to keep on stacking on cash and cash. Having cash in our bank accounts or having cash in our offices, no. At the end of the day, ladies and gentlemen, once we hit our maximum, then we must get away. This is a ceiling we have knocked there. We must get our way of going down. And how do we go down? We buy. So again, we buy. We go back to our 2 million position. Remember, cash cannot keep on increasing. Like when students close, like right now, I'm so sure by the 27th of next month, these guys will be doing their exams. After they do the exams, of course, there will be that sluggishness. Students coming back to school. So it reaches a time again when we start even spending, these 2 million that we have. So if we start spending the 2 million that we have, this is how we shall spend it gradually. We are still comfortable there, but we have a minimum. This minimum could be like $1 million. We cannot stay without cash at the college. The college needs some expenses to be met abruptly. For example, government officials, like the city council, for example, can come to harass us at Standbank House. If you get the city council coming to harass you, and for example, they want 50,000, or they lock you inside, you as a Christian, what will you do? You as a Christian, what will you do? For example, you cannot meet all their conditions. So they've come, in this case here, they want to take you to that bad lorry. Okay, so great. So I can see people in this case here talking to kidogo. But at the end of the day, my concept here is that there is no way as a college you can run with zero balance. Unless you'd want to go and access an overdraft, which will be costly for you. All right? You can't. So in this case here, we have the minimum here. So then what do you think shall we do when we reach this? Remember this minimum, from here to here, we talk over a deficit zone. So once in this case here, you realize you have hit 1 million and you don't want to go down further, what will you do? What will you do? What will you do? What will you do? Please talk to me. I'm your father. Talk to me. You can see I'm not even fearing you guys. Talk to me. Talk to me. In this case here, we have realized you have hit 1 million. Do we go and steal to boost our... We sell securities. You guys are bright. So in this case here, there are these securities you have bought here. So you come and sell these securities. You sell the securities like that. You sell the securities like that. You sell them. You sell them. Now, please listen. Please listen. Please listen. So you sell them. When you sell them, of course, cash now comes. You go back here again. You go back like that. Ladies and gentlemen, please remember, I know most of you guys, you normally say that the customer is the king. Other people in this case here tell us that the employee is the queen. To me, having done a lot of consultancy for very many SME organizations, I know cash is the king and the queen. That is why whenever I go to, like yesterday, I took some guy here to some restaurant, right? We had these professional accountants what here, a meeting where I was giving a speech there. All right. It's always good to go modest. Ladies and gentlemen, trust me, you can never scare anybody in this world. Whatever cash that you have is your king, it is your queen. I'm a Christian. If I were not a Christian, I would have told you, whatever cash you have, please worship it. When you start seeing yourself, in this case, you're buying people liquor of 50,000, 70,000, just blowing your money just like that, then know straight away that in terms of financial management, you are illiterate. Why should you want to please people? Cash is king. Cash is your queen. This thing, you need to protect it like nothing. I mean, when you have it, I mean, it's yours when it's in a money market fund, or when you have bought treasury bills with it. But if you come, in this case, you tell me that you have a bottle here, and in this case, ladies and gentlemen, with this bottle now, you've bought people bottle worth 50,000, you're praying for it, tapping it like this. What type of a person are you? And you're doing CPA. Or am I tough with that talk? Is there somebody who is able to understand what I'm talking about? And you have to allow me to be tough anyway, because you came to my training. You came to my training. You tab a blue label once in a while, okay? Okay. Again, please, as I discuss this, I'm not saying that you have to be very, very mean. As this gentleman is telling us, once in a while. But it doesn't have to be that expensive, really. It doesn't have to be that expensive, really. Right? So to me, what I know, ladies and gentlemen, you can kill me, you can do whatever you want to do to me, but I believe cash is always king. And I've even, like, there are people who call us to wedding committees. They tell me, Mwalimu, we want you to be the chairman of this committee. So I tell them, fine. So we start doing a budget. So the budget goes all the way up to 7 million, 8 million. I mean, some of the things we see outside here, They're crazy. They're crazy. They're crazy. I mean, give me 8 million today at an age of 25. I would rather, if it's Nairobi, build my own thing here in Nairobi. I start my family with an asset called, in this case here, a house. I stop paying rent. Even somebody's daughter will be happy because she's coming right away to stay in our own home. I'm not saying that you don't do weddings, but modesty is key. I mean, there is no 𝐷𝐞𝐿 that is, or aromat that is being added if you have, in this case here, like a big, I mean, no, it doesn't matter how many vehicles you'll be having in that thing. It's marriage. It's marriage. But we shall overcome. We shall overcome. We shall overcome. I can see Kawera there talking something very nice there. Talking. Great. So one thing we are in agreement about, all of us, is that we shall start, ladies and gentlemen, in this case here, protecting our cash flows. Protection of cash flow should be a full-time job for you. Should be a full-time job for you. And how do you get to protect your cash flows very well? Ensure that all your investments are done at source. When this money comes, let it be chopped at the bank. You have, in this case here, standing orders. You even have standing orders in your accounts office, where your accountant, in this case, deducts out of the 80,000, he puts aside 30,000 for your SACCO, for example. If this money hits your pocket, do you think you can save money that has already hit your account or even your pocket? I mean, everybody has got a way of knowing that this man has got money. Even your mother at home. I'm not saying you don't give them money, but at times you'll also get relatives, in this case, asking for what you can't afford. If this money had been deducted at source, you'll not be having even those problems. I mean, we must protect cash through all ways. So then today, what I would want to show you is how do we compute this optimal cash position? How do we compute this optimal or returning point? Great. So I would want to just do a question. Of course, I'm aware that there are students here who are not doing CPA. There are students here who are not doing CPA, but I would want to use a CPA question to demonstrate something that is very practical that we use outside here. And the question that I would want to do is the May 2016 question number 3B. May 2016 question number 3, boy. This is financial management. Financial management, it's quite a short question that I'll be able to write parameters here, and then we do computations, practical computations for those positions that I've given you. All right. So is there somebody who has already gotten this question if you are doing this level? Anybody who has already gotten the question? Financial management, May 2016, question number 3. Boy, if you're not doing CPA, no problem. I just want to demonstrate how Miller OR can be used in your cash protection strategy. So have we gotten this question? Yvonne is saying yes. Great. Frida is also saying yes. Thank you so much. So ladies and gentlemen, we are reading this together. Manjewa Limited maintains a minimum cash balance of 2 million. You see, minimum cash balance, it's upon you as a business to do your own computations and say, hey, every month I need this minimum cash balance. So minimum cash balance shall always be given. Minimum cash balance. So here they have given us the minimum cash balance of 2 million. Minimum cash balance of 2 million has been provided. Yes. So we are told here, the standard deviation of its daily net cash flows is estimated as at 22,000. So standard deviation, we write standard deviation like this. 0, and then you pull a tail. So standard deviation is a measure of what is spread. It's a measure of variability. Of course, you can't have your cash constant with you. This cash will either be going up or down. So the standard deviation given here is 22,000. The standard deviation given here is 22,000. And then, ladies and gentlemen, they are telling us there that the transaction cost of buying and selling marketable securities is 60. The transaction cost, that when you go to buy or sell, like now we said up there, you remember that graph, there are times you'll be buying shares. There are times you'll be buying treasury bills. Buying T-bills, you can't buy them for free because you can't buy them in most cases on your own. You would need an agent. Even if you were to buy them on your own, they are incidental expenses. So every time you buy T-bills, for example, or ordinary shares, for example, you'll be incurring what we call transaction cost. And transaction cost, ladies and gentlemen, plays a key role in our Miller-Orr model. So transaction cost, we are told here, is 60. The rate of interest for the marketable securities is 5% per annum. So we have interest per annum is 5%. But now remember, for us, this I, and that is why I always insist that our I must be a daily rate of interest, So this is 5% over 300 and what year? 65. So is there somebody who can give me this daily? Remember, I is the daily interest. Is a daily interest. Is there somebody who can just punch in their calculator, give me 0.05 divided by 365, give me 0.05, give me 0.05 divided by 365. So this gives me what year? Of course, depending on the primary school that you attended or secondary school that you attended or which year. You see, if for example, you're given like say 2.5 times 10 raised to negative 5, or students can't see that. If you're given, ladies and gentlemen, here 2.5, we have here 2.5 times 10 raised to negative 5. Somebody who knows mathematics very well will tell you this negative means that you write 5 zeros. You write 5 zeros, 1, 2, 3, 4, 5. And then you write now these 2 5 without a decimal, like 25. And then in between the first 2 zeros, you put what here? A decimal. It will be sad to see students who count like 1, 2, 3, 4, 5. It will be very sad. A student who knows mathematics, if for example you are given like 1.4 times 10 raised to negative 3, it's negative 3. Negative means 3 zeros before the number. 3 zeros before the number. 3 zeros. So we have 0, 0, 0, 3 of them. And then now 1, 4. And then you put a decimal like that. You put a decimal like that. This way you will never confuse. So is there somebody who can give me this I using this approach? What do we have here? Somebody who can give me this I using this approach. Somebody who can give me this I. Somebody who can give me this I using this approach. What do we have? Now they're not talking to me. And I want to show them something very nice. Like how do you manage your cash in your SME? So Musa is giving me 0.0014. So it means that in their calculator, they are getting 1.4 times 10 raised to negative 4. So then these will be 0.0004 of them, 1, 4, and then you put a decimal, the daily interest. Thank you so much. Now, ladies and gentlemen, after that, what else are they telling us? If you go down there, they have told us assume 365 days in a year. Once you get this kind of a question, you've been able to summarize. You have the standard deviation. This is standard deviation. You have the T. Then the very first thing that you need to come and do if you would want peace, if you want peace in this world, the first thing that you need to come and do if you want peace in this world is to calculate a parameter that we shall be calling Z. I would want us to calculate a parameter that we shall be calling Z. And how do we get Z? We normally take TQ squared, TQ squared. Talk of 3/4 here. 3/4 TQ squared all over I. And then you come here, everything there, you raise this to power a third. You raise this to power a third. Abracadabra, let's see whether there are students who are following. How are we getting the Z of Miller-Orr? To get Z of mirror, this is what we are doing. What we are doing here is to talk of 3/4 of T, standard deviation squared, all over interest raised to power a third. So then my Z in this question will be 3/4 of the transaction. Is there somebody who is able to remember the transaction was 60? Is there somebody who is able to remember the transaction was 60? The transaction was 60. Transaction was 60. Transaction was 60. All right. Multiply this by the standard deviation, which is 22,000 squared. Everything that I get here, I will come and divide by the I. And the I, you guys gave me this like that. All right. And then whatever I will get out of these computations, I will need to come and raise this to a third. I'll come and raise this to a third. Let me see, ladies and gentlemen, whether we have even a single student will be able to give us the value of Z. Will be able to give us the value of Z. Will be able to give us the value of Z. Is there anybody who will be able to give us? This is quite a nice one. Because I'll come and say 3 divided by 4. I say times 60. I say times 22,000. 22,000. But now this has to be squared as per the formula. This has to be squared as per the formula. This has to be squared. This has to be squared like that. I will not even say equals. I'll come and say divided by 0.00014. And then I'll be able to say equals. When I say equals, I'm getting quite a huge figure. This huge figure must be raised to a third. How do I raise this to a third? Remember, we have our raising function like this. We have our raising function like this. We have our raising function like this, written like this in the calculator, quite near the logarithm. So I have to say, in this case here, raised to, I open bracket, and then I say 1 divided by 3, like that. And then I say equals. I'm getting 53. I'm getting a Z of 53. I'm getting a Z of 53, 782.78. Is there anybody who is able to get this Z? Is there anybody else here who is able to get this Z, this Z, this Z? How I wish I would get like 20 students who are really listening, who are trying to understand, because this is very practical, very practical. The first metric you need to get is Z. Is Z. Z. You must get Z first. Z. You must get Z first. If you don't have a calculator, maybe you're not an accountant, don't worry. Just try to get a general understanding, so that when you call some of us for consultancy, at least you need to really appreciate what we are talking about. Are these guys able to get? How do we get the Z? This Z formula, it is 3/4 transaction cost multiplied by standard deviation squared. Standard deviation squared is also known as what here? Variance. If you remember, this one here, as I pardon, this one here, we call it the standard deviation. This one here, when it's squared, we call it variance. 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 Then how do we get this? It's the raised. If you understand how the raised is done, after you say raised, you must always open bracket, and then you say 1/3, 1 divided by 3. I know it is the raised. I know it is the raised. I know it is the raised that has an issue. I know it is the raised that has an issue. I know it is the raised that has an issue. The moment in this case here you raise nicely, you will never ever go wrong. You will never ever go wrong. Let's try to calculate this. So this will be 3 divided by 4. 3 divided by 4 times 60. I say times 22,000. I square that. I hope you're able to see where the square is. Remember, I'm not saying equals in between. I would want this number alone to be squared. And then whatever I get, I'll come and say divide by 0.00014. And then I say equals now. I'm getting 1.55. Quite a huge thing. Quite a huge thing. Quite a huge thing there. And then I would want Gideon will come there. After I do this, I would want, ladies and gentlemen, I would want to get the cube root of this. How do I get the cube root of this? It's raised to a third. This is a third here. So I'll come and say raised to, open brackets, 1 divided by 3. 1 divided by 3. Then, ladies and gentlemen, once you do that, you'll be able to give us what here? That 53. Kawera is asking a very good question there. Kawera is asking a very, very good question there. A very good question there. Perhaps Kawera happens to be a student of BDA. The raised 2 is on top of number 6. The raised 2 is on top of number 6. That's raised. But again, remember in BDA, there is a power function. There's a power function. A power function. Leonard says, phew, at last this guy has the figure. Do we have many students who have been able to get this figure? Today, you guys are dull. And actually, I even don't know who I'll give a present. Because now students today, they are not talking to me at all. They're not talking to me at all. They're not talking to me at all. I don't know who I will give a present here, really. Frida, at least Frida has gotten this. 53, 53. Great. Great. I'm counting. I'm trying to count here. I'm trying to count here to see how many have been able to get this. I'm trying to count. I'm trying to count. Yes. Now, ladies and gentlemen, once you've been able to get the Z, then now you should be able to answer the questions. The first thing they want you to get there is the spread. The first thing they want you to calculate there is the spread. How do we get the spread? So number 1, they want us to give them the spread. The spread. So number 1, they want us to give them the spread. So having gotten Z, so we'll come and give them number 1, the spread. Spread, remember our graph. If you remember our graph, we had the returning point. The returning point, we had the maximum here. We had the minimum here. Spread is this. This is the spread. This is the spread. And to get this spread, we have got 2 ways. To get the spread, you basically talk of 3Z. The spread, you take 3Z. To get the spread, you take 3Z. So therefore, this will be 3 times our Z, which is what here, somebody, 53, 782.78. Can somebody give us this figure? 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 So whenever they talk of spread, we always talk of 3Z. 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 So according to Yvonne, she's getting here 161, 348. 161, 348.34. So that spread is very key to us. It's very important to us. That is the spread. Thank you so much. So spread, we have got 2 ways of getting spread. This is the first way. And then the second way of getting the spread, it is this high minus low. High minus low. That gap will give us the spread. Will give us the spread. So this is very important. I would want you to write this other method of getting the spread, method 2. But you'll just write the formula, method 2, that we can also get the spread by taking the highest cash balance minus lowest cash balance. And please, in this case here, highlight this using a yellow highlighter, a black highlighter, or whichever color highlighter. I would want this to be highlighted. I would want it to be highlighted. I would want this to be highlighted. All right. So then if that is the case, can we go to number 2? So number 2, ladies and gentlemen, then you want me to give them the upper cash limit, which is the same as this. Upper cash limit, which is the same as the H. So this is H. So how will we get this upper cash limit? You will take basically the spread given plus this lowest or lower cash balance. Lower cash balance. The lower cash balance like that. So the spread that we have is 161. The spread that we have is 161, 348.34 plus. Is there anybody who is able to see the lowest cash balance given in the question? Anybody who is able to see the lowest cash balance given in the question? Lowest cash balance given in the question. Great, thanks, Nelson. Bye-bye. 2 million, isn't it? So this is 2 million, 2 million, 2 million. Of course, I'll be talking about pension schemes in a short while, etc. Great. So then could you kindly give me this? This, I suppose, should be 2161, 348.34, like that. Great. Upper cash limit. Upper cash limit. So can I go to something different? 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 Yes, thank you very much. The last one, they want us to give them the return point. The return point. They want us to give them the return point. They want us to give them the return point. So they want us to give them the return point. So number 3, they want us to give them the return point, which is the same as the optimal point, optimal cash position. Or at times you get your examiner talking of the target point. So to get this target point, basically you take the L plus Z. You take the L plus Z. L plus Z. So L is 2 million. 2 million. And Z, I've forgotten my figure, but fortunately I have it in my calculator. Z, if you remember, we had Z. We had Z of 53,782.78. 0.78. 0.78. 0.78. 0.78. 0.78. 0.78. 0.78. 0.78. So then this will give us what figure? Is it 2053? 782.78 Kenya shillings. Somebody confirm here, is it 2053 782.78? Great, thank you very much. And again, you'll also get some people telling you that the return point, this is still good enough, return point is the same as L plus the spread divided by 3, 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 plus the spread divided by 3. If you remember, spread as spread. You see spread. Let me just repeat something here. This is L plus spread is the same as 3Z. So 3Z divided by 3. Itaenda. Inabaki L plus what here, somebody? L plus Z. L plus Z. So if you want to try, you can come and try here. Of course, you know what L is. You know that our L is 2 million plus our spread. Spread already, we have the figure for the spread. We have the figure for the spread. It was 160. It will give you the same 161,348.35, and then you divide this by 3. You'll end up getting the same figure. Okay, you'll end up getting the same figure. Great. So are we together up to here, really? Are we together up to here? Are we together up to here? Are we together up to here? Are we together? Is there somebody who has picked something new that they had never seen before? Is there anybody who has been able to pick something new? Esther says me. Great. We shall overcome. We shall overcome. Great. We shall overcome. So then, of course, given that I'm giving you guys a free of charge class, you must also allow me to do what here? To do some commercial break and advertise our revision kits, isn't it? Which comprise what here? CASNEB questions and answers. RCM's revision kits, which cost 1,000. And of course, if you're interested in buying our revision kits plus our online Zoom classes, you simply give us a call through this number. 0793 555 000, 0793 555 000. Yeah. And of course, at this season, when we are going towards block release, you really need us. You work with us. People like Ivonia, they'll tell you RCM Online College is a sure bet. Hapa si mahali pa kurudia maneno. It's a sure bet because you see, for example, the students who have paid us for financial management, of course, you guys are being taught by Mr. David. And here I am. So we are teaching you two people. Look at the kind of a class we are doing. for that price of about 4,000, 4,500, I believe you guys are getting value for money. I believe you're getting value for money. There are very few colleges who will be able to do exactly what we are doing around here. Otherwise, thank you. So if you allow me, then I'll be able to take you to something very different. This video, of course, I'll be hanging this video on YouTube. And I would expect you to keep on following Mwalimu here also on YouTube, because you'll get so many a lot of stuff in there. So like now in my next, which will be a session after our break, 2 minutes break, I'll be teaching you something very nice on personal financial management, known as what here? Pension schemes. Now, ladies and gentlemen, what do you think of pension? What do you think of pension? What do you think of pension? Thank you, Isaiah. It is simply the best. Value for money. I don't regret joining RCM. Thank you very much. Pension is the most important thing that you can always think about. If you go today to KRA Towers, besides next to KRA Towers, you'll be able to see what we call CBK Pension Towers. CBK Pension Towers, if you have been very keen, you will get in this case here quite a huge building, which is twin towers. So we have one tower like that, another tower, I'm just exaggerating, built like that. The most important thing is that these towers, two of them, they are bending somehow. Why are they bending like that? I would want you to go and Google. You can even Google right now. Why the architect used this inspiration of bending when he was coming up with this structure. Ladies and gentlemen, today, I'm so sure all of us, including myself here, including the young girls who are here, you guys can wear high-heeled shoes and you can march right with your backs straight. Everything is intact. But trust you me, when you hit 65, 70 years old, regardless of how beautiful you look today, regardless of how strong you look today, once you hit 70 years, you will bend. Is that true or false? To symbolize old age, when we start bending. It doesn't matter how strong today you are, even some of us. I remember when I was young, I was looking at my father who was like now today's age, and I used to say 𝐸𝐸𝐻𝐻𝐸𝐸𝐻, kibaba, mwingine ananiambia ati wababas. Even mnatuita saizi, lakini miaka chache tu utakuwa wewe mamas, utakuwa mbabas. That is the truth of the matter. We shall overcome. Okay. I like some confidence of somebody here who is saying Kawera. She's saying, yeah, hata bend. You just look at your lineage. Look at your mother. Look at your grandmother. You don't tell me that your grandmother is still walking straight like this without even walking stick, or whether you like it or not, ladies and gentlemen. Again, bending would symbolize what in this case here? Reduced energy levels. All right. So unfortunately, all of us, or rather majority of us, 90% of us, we know for sure that we shall be bending when we get old. But very few, again, 90% of us are not having any retirement plans. Nothing. I was giving a talk to one of these Taiwan banks regarding this retirement. And this time round, I just got retirees. All of them were retirees who had been called for a talk, and of course, some nice get together, have dinner together, and they were able to spend in good hotels in Nairobi here. I mean, I was one of the speakers there, and I had a chance of mingling with those old wazes and mamas. When you retire, life is not easy outside here. In your personal financial management, you must always be thinking about, ladies and gentlemen, your retirement. You must create a pension scheme somehow. And this is what I'll be talking about after our break. We need to take a break of how many minutes, somebody? Can we do a break of 2 minutes? Only 2 minutes. And of course, for the YouTube guys, this after break will be a different video. You'll need to watch the other video in